give us your coordinates. From where are you dialing to?
Right from Zurich, Switzerland.
Great. Are you
early in the morning? Straight 8 a.m.
Lovely. We just imagining you in like beautiful mountainous topography, and maybe having like a nice wine from Epesses and like
yeah, well close. So we have everything in the center of Europe: mountains, snow, good wine, good cheese, good chocolate. The whole cliche is working.
Yeah, the cliches are there for a reason. They didn't come from nothing.
That's true.
Well, we're delighted to have a chat with you. So thank you for making time.
No worries. So appreciate the opportunity. Thank you. Yeah.
Have you spent time, I'll ask you this at the outset, and then I'll know sort of whether we can steer into this territory. Have you spent time in Southeast Asia?
The last visit due to COVID happened in 2019 for 2 weeks in Singapore.
Great.
And the next visit will be indeed in October this year. We booked already also Singapore and Malaysia and Indonesia. That's on the topic. So honestly, mixing business and pleasure. Yeah.
That's the way. Good stuff. Well, there's good business and good pleasure to be had in this.
Absolutely. Yeah. And Singapore is you're based in Singapore, I assume.
Correct.
Yeah, so it's a fantastic place, a great hub for the region, and it's like like Switzerland in Asia. What should I say? So that's great place to be.
It's a great place for the conversation that we're having too. I've lived here 16 years, and you already had like a groundswell of UNPRI signatories and ESG focused and sustainability focused and green focused ones. I mean, it's nothing like it is now, probably all over the planet, but certainly here. But it's just to say there were seedlings of this decades ago in this part of the world.
Yeah.
And obviously there's Singapore, I think, matters in this conversation to the extent that there's some very concentrated wealth here, whether that's the sovereign wealth represented by not only the indigenous sovereign wealth, but also a lot of the global sovereign wealth offices have put out a campus here. And then the family offices are pretty significant here too.
No, absolutely. So it's
Yeah, so maybe just by way of thinking about who we share this with and the angles that people look at, not insubstantial portion of Sage client base and community base are listed and private investors. But then the law firms that we work with really care about ESG in a number of kind of facets that they'll look at it and take interest. And then a number of the consulting firms, and we have some focus in government, whether that's government affairs, government relations, lobbying, and so forth. All of them have a different but sort of parallel interest in your area of expertise.
If I may then announce later in the interview or whatever, whenever we will be up and running within, let's say, 2 weeks. We have already prepared it to come up with the Singapore Straits Times Index and assign those members the GGX ESG ratings too. So I would say, as you already mentioned, Singapore is a very, I would say, forward-thinking place in Southeast Asia, and that's why we thought, okay, let's not cover only the North American and European listed companies, but also start with some Southeast Asian parts. And there we focused on the Straits Times Index. Yeah.
Well, I don't want you to be demure and not overtly pitch GGX. It's really interesting. And so we should let people know specifically about it. When we share this, if you don't mind just kind of linking whatever like dates, etc. If there's already some press copy, we'll make sure we include that.
Okay, great. Yeah.
Harry Schnabel writes of you. I found this funny. This is in the opening pages. He doesn't like to be a blowhard about what he has developed. However, Martin Robb invented the world's first dynamic ESG ratings, a game changer for investors seeking transparency and understandable scores. So you don't like to be a blowhard. It's going to be my objective to get you to be at least a little self-promoting.
Yeah. At least a little, yeah.
Yeah. Well, I think maybe if you're all right, let's just kind of take the conversation wherever it
sure.
leads.
Yeah.
You didn't come to your position now, your interest now through activism or being part of the University Environmentalist Club. You came via a different path. So can we sort of just get a little bit of the Martin Robb story in terms of how the antecedent action before you got to GGX and your other roles?
Absolutely. So I was born and raised in Bavaria, so surrounded by all this picturesque cliche landscapes, and started there in 1996 with a classic European-like bank apprenticeship. And the late 90s were kind of a time horizon where for business and finance, interested persons, it was easy to get infected, so to speak, with Wall Street virus, in Europe, especially in Germany in this time, the so-called new market, Neue Markt, was kind of the NASDAQ of Europe. That means if you are a young, ambitious bank apprenticeship guy, you within hours you get infected, and that led ultimately, to be honest, to my further career. I continued after that to a large bank in Munich, and then through a newly founded joint venture between PIMCO and State Street. I got also involved in the classic Wall Street American financial mechanism in that way of how the things work. And simultaneously, of course, I did my studies. And after that, I started with classic product development. That means inventing from retail certificates to jet fuel hedging for large European airlines. That meant already there, I love to be kind of a generalist. I'm very interested in contemporary things, and continue that until today. And that, of course, led me in 2013. I meanwhile moved here to Switzerland to get involved with in those times in the past, the hit name of sustainable investing. And of course, in 2013, there I've been responsible for a marketing and financial marketing and publishing house here in Switzerland. And we started with the idea, hey, okay, that's something meaningful, that's something kind of a very new aspect in investing. Let's do kind of a special publication just devoted to sustainable investing. And guess what? In 2013, launching this special publication was a total flop. So no interest. A few radical asset managers who said, oh, cool, guys, you're at the forefront, that's nice, but effectively total flop. That was the first impression to, okay, it's perhaps a bit early stage. And guess what, of course, 5 years later, so late in 2017, which was my last year in that classic financial marketing space, such a publication was booked 4 times. So it was completely started off with, okay, that's something, a new thinking. It's values driven, it's a differentiator but it's of course simultaneously the attention towards climate change started, and that meant ultimately, okay, this is not just a one-off trend. This is a new way of thinking, a new way of recognizing, okay, what's going on out there, and that led then ultimately, of course, as I'm a more finance and investment guy, to the idea, okay, sustainability, ESG, what is already achieved in the financial markets in regards to how green is a company, what assumptions are made, what are the mechanics, and effectively I spent about 3 years to get an understanding, a clue, and I also learned from my past professional career really to ask questions to other people and to ask questions to myself, and that months over months brought up, okay, in the space of ESG ratings, ESG data, how is everything measured and judged? There is really room for improvement. There is room for innovation. And that's how we then ultimately came up with certain ideas, with certain innovative approaches, and of course modular approaches. We don't tell the world only our thinking is the right one. We are, as peoples on a planet, it's modular. That's also what reflects ultimately in our way to think.
Mm-hmm. Well, you're also, I think, by way of analogy, not the first fellow in history to go and look at something that hitherto is very unmeasurable. It defies measurement. It's very slippery. And still to say, we're going to give it a go. In psychology, people said, well, what about this crazy thing called personality? Like, how would we try to put any fence lines around that? And yet you end up with reasonably predictable and sophisticated tools after you get, several thousand experts just cranking away for a few decades or more, and some real luminaries. I think maybe by my impression and a lot of our community, there has been a lot of trial and error, and it's almost like there's an open contest. It's an open essay contest. And it's like, look, all comers welcome. But what would work for this? Because it walks such an interesting tightrope. But maybe I can ask you about that. Measuring things that are thorny, they're naturally resistant to measurement, like greenness and social, whatever these three slippery words are, E, S, and G. And there's other slippery words too.
Yeah.
But what have you learned? Have you borrowed the techniques from banking, or have you taken inspiration from other measurement mechanisms elsewhere?
Yeah, absolutely. A good question. So we tried, I tried as the guy in the machine room. I tried to combine two very relevant and very, I would say, important perspectives to make an ESG judgment, an ESG rating work. So one side, of course, definitely you mentioned that is the investment industry, but more specific, the buy side, the ultimate buy side, whether it's a family office or an endowment, or really the sophisticated retail client who is able and willing to invest now more greener. So that means those target groups, they of course want to have kind of a clear interpretation, again here by personal, of course, learning, and of course also testimonials from those groups. I definitely know, okay, meaningfulness is very relevant to them. Again, especially more the registered investment advisors and the sophisticated end clients, those persons, individuals, they really want to have it very specific, clear. They don't want to have an guessing. They want clear, understandable answers. Of course, also they want to have kind of interpretation. That's why, but I can tell that later on why I created or insisted to have like a school grade from 0 to 10. That's easy to measure. It's not 0 to 100, etc. And the other thing is, of course, I wanted to hear really the voices and the worldview of the corporate reporters. So meaning we consulted and partnered together with a company who is helping corporations to get its sustainable reporting done. So that means really, guys, we had the pleasure to work with a very experienced lady there, and she's still part with the rating committee. So Manuela helped us very much to understand what are companies able to report, no matter from which sector they are. What are companies able to report on a consistent basis? So that means no bumpy data gaps, etc. And at the end of the day, how we could drill down all these 400, 300, 200 factors to the most essentials one.
Right.
And so that we combined both elements, the buy side and of the other side, the corporations, the companies, what are they able to report? And so that led us then to the ultimate drill down of the relevant things.
Just a little point of clarification. When you say the company reporters, are you talking IR, investment relations, or the CFO, or is this another typical character that we're talking about?
Yeah, so meanwhile, as of today, ESG reporting affects both. So the sustainability team at the company, and of course, the CFO, because especially the S and the G, even also the E, implies also impact, of course, on the financial and the P&L. So that means our conversation directly is, of course, with the sustainability team, but also we reflect certain elements of the financials, especially an alignment of EBIT to the executive compensation. And also with the latest revision of our index model, we also consider the revenue, so the revenue dynamics of the company compared to its greenhouse gas emissions. So we again there, it's really holistic.
At what size does this matter? So yeah, I think about some of the fund managers here. Some of them would just say, like, one of our great benefits is we can move in and out of micro caps, mid caps, you name it. It sounds like you're talking about the large end.
Currently, we focus in regards to the application, the coverage to large and mid caps. Yeah.
Okay, mid caps then. Yeah.
Yeah. But to be honest, and it's well, some call it a fun fact, some others call it a stunning fact. Even within the S&P 500, there is companies below the S&P 100. There is still, I would say, a decent amount of corporations which are not yet ready to report significant data points. And we focus just on 17 on the core data. That means the large caps and the mid caps, those are the companies where you get currently the best, broadest data. As soon as you go to smaller capitalized companies or to more exotic places, you're currently mostly lost in regards to data.
Mm-hmm. Mm-hmm.
And again, one element also here, of course, to know in ESG data, that the ESG data are the most relevant part, I would say, in regards to get correct, meaningful, and workable ESG ratings. So no matter which methodology you follow, whether it's from the ultra-large financial conglomerates, those ratings are on the same, I would say, or they result and are relevant, linked to the same necessity that ESG raw data have to be reviewed, good quality, back-checked, etc. Also on our end, we did a lot of checks, mystery shopping, and up to 20%, 25% of the ESG raw data you can purchase currently in the market are wrong, incorrectly attributed, or linked to false time zones. So that means there is still room for improvement. And if you talk to all sorts of investors, I would say, meanwhile, at least the half of them, they are aware that there is, that there is room for improvement again in the databases. So one element to finish up on that aspect is, for instance, reviewed lastly a middle-sized company from Germany and wanted to have the 2022 reports, means that includes then the 2021 ESG figures, and they have not been available. So usually in 2022, you get the 2021 data. On other databases, on other providers, those data appeared already. Then our data acquisition team reached out to that specific company, as we always talk directly with the companies. And they said, that couldn't be because the official figures have not yet been published. So what happened? The other data company, they just interpolated based on the 2020 figures, 2021 figures. So just a glass ball assumption. And of course, if you are then the data subscriber, the asset manager, and you want to steer or to reallocate your portfolio, you are thinking, cool, okay, these data are in, now we do our rankings, our modeling, etc. But effectively, most, or at least 1/3 of the data are just interpolated by the data provider. That means being an asset manager, being a family office, being a consultant in ESG, it's very important to spend time to really understand, okay, on which database I'm acting on, and of course to effectively have an understanding how the mechanics, how the reportings, how all these things work. So just buy something pre-cooked and use it. That could be then in some extent lead to unwanted surprises.
Right. This is, to the uninitiated or folks considering like, hey, maybe we should build a reporting side to this. I think there's a couple of questions that will come up. It sounds like reasonably elaborate, not crazy, but reasonably elaborate structure and process. I mean, you can't hire an intern to do this, right? So the folks that you're talking about, on the reporting side, they're probably not individuals, they're teams. And they have to really commit to certain things that don't last, 6 months or 18 months. They're permanent commitments effectively. So what is the rationale? How do they say, yeah, that's, why don't we put $750,000 into, showing that we're, up to snuff, up to standard?
Yeah, well, but one aspect which is also part of the truth, of course, that everything in ESG, everything in sustainability, and that's my deep conviction there, we are currently operating all together in the whole industry in, I call it the modem age. So that means really compared to internet, it's like 1996. Everybody is feeling super proud to have this little modem box on his desk or on her desk. And it's cool, it's involving, yeah. The same thing as in ESG, really the same thing. Everybody has the feeling, okay, cool, that's it, that's the standard, all right. But looking forward, we have the 2024 25th event in the European Union in regards to the corporate reporting. That's a drastic, that's like really landing on the moon, especially there are many open questions. On the other side of the Atlantic Ocean, we have well, a certain tipping point in the United States in regards to ESG and sustainability, really two angles. Of course, highly inspired by political reasons, let's call it that way. On the other side, we have the huge opportunity across emerging Asia. There could be also new streams, new developments. So that means the whole planet is really evolving and developing in that segment. And that leads, in regards to the whole thing you asked, that leads that we have really quarter by quarter new developments, modular developments. And of course, like other industries, there will be, of course, kind of a consolidation of thinking, a consolidation of models, and of course, honestly, a consolidation of providers, users. That's for sure. That's very similar, and of course, everybody who is part of that also has, like you mentioned, you can't just, let's say, invest one day a month to stay ahead of news, ahead of trends, ahead of research, to really need a dedication. But the good news really is that dedication will pay off. So that means you see it also if you look to hiring portals, to like eFinancial Careers or others. ESG is a mega trend, and it's very, very, I would say, difficult, challenging to find talents. On the other hand, again, whoever is in the industry, females, males, no matter of age, if you want to improve your career, or there are a lot of, driven to the COVID phenomenon, there are a lot of professionals in the market who assume perhaps for career changes, for reformation, so to speak, and ESG and sustainability is a perfect place for educated, well-educated persons to reform itself, perhaps to drive its career path to ways. Yeah.
It's one of the reasons I wanted to ask you about your sort of path of entry, because I find that really interesting, right? And I don't mean to in any way denigrate, you probably need both of these folks, but if somebody comes from like, sustainability in the environment, biology, subspecialization, they've done like, 2.5 bachelor's degrees, they're going to have a different lens altogether on where all this fits in if they go and work for like Impact Investment Exchange. Whereas if they've just been an absolute killer on the Morgan Stanley desk for a decade, and they want to go to Impact Investment Exchange, I think probably Impact Investment Exchange needs both those characters, but they both are going to have to bring something to the table. And it sounds to me like you're saying, actually, at the moment, there's more openings than there are available talent.
Yep. Yeah, it's
do they pay well?
Sorry?
Do they pay well, these openings?
Absolutely. Not only driven by the supply-demand situation, so that's of course one driver, so to speak. Again, here from a corporate point of view, there are certain elements you can't or you shouldn't ignore ESG and sustainability. One, of course, the main driver, of course, also a main driver for why data and ratings are important is regulation, especially, of course, in Europe. So that's, I would say, the ultimate driver, or one of the most dominant drivers for the next years. Mm-hmm. On the other side, beyond of regulation, it's definitely reputation. So if you are a CFO or a CEO and you're commingling with your peers, I don't know, out of a conference, at a dinner or somewhere else, and you're in talks, as of today, it's beyond the good tone. It's beyond usual standard to have a sustainability team. And you are, as corporate executive, well, feeling perhaps a bit, well, yeah, special if you don't cover that aspect, if you don't care about the environment, if you don't care about the clean air or saving this planet in its all beautifulness. So that means reputation is also a very important driver. And last but not least, of course, costs of preventing damage, preventing PR disasters, etc. But of course, to be very honest, especially in the whole perspective, it's, as again here, it's also modern times or modern time or modern age in regards to what a company, a corporation can do to become really greener. So beyond the quantitative aspect. So one example, for instance, Starbucks eliminated in 2021 all its plastic cups, so to speak, which is a massive achievement, really fantastic. Of course, then looking to the details, well, you have still this plastic lids, and in regards to the paper cups, about 1.3 million trees per year are still getting harvested to come up to the amount of paper or pulp to create these cups. So that means, on the one hand, really a fantastic achievement, and everybody who walks in the mornings at beaches knows that plastic is really a very driving topic. We have to act something on. I have to act in that regards. And on the other hand, of course, so plastic, good, check the box. One of the largest global emitter on plastic, Starbucks, have abandoned it almost. Then we have the lids, and we have the thing on that paper issue. So that means it needs time. It would be very unrealistic if we expect within the next 2-3 years everything is solved and we have a happy planet. That needs to be discounted to a realistic way. But of course, and again here, everybody, and especially the corporate world, is well advised to have a clear path of smaller but manageable steps to come forward. Big announcements are nice, but reality showed us very much that the big announcements ultimately led in big disasters. And again here, so small, manageable, measurable steps are way better. Yeah, and that's also, of course, what's reflecting then in the financial world, that it's better to have near-time targets in ESG, near-time measurement, and yeah.
What do you, in your expertise, make of very grand goals? So the UN will publish grand goals, individual businesses, Parliament. I'm a Canadian. The Canadians care about, their own industries and sort of where they're tracking and things. But there's a lot of talk about like, well, way to go, guys. You set another grand target for like 15 years from now or whatever, and we meet no goals at all. So you caught my ear when you said near-term targets. What do you make of grand objectives?
Yeah, well, one very honestly, I know it's a bit liberal, or others would call it radical. One aspect, of course, and that is inspired by the very dominant hit name of taxation or taxonomy. In regards to taxonomy, what I would suggest, or that's perhaps an ultimate trigger in regards to near-term goals, is to actively link sustainability targets, could be include social and governance targets, with certain tax incentives. That means, inspired by the word taxonomy, it could be I would say, a very interesting, incentive, even especially for the corporate world, to say, okay, guys, if you bring down for instance, we start at CO2, we start at your scope 1 and 2. If you bring down that 5% or more per year, you get a tax relief of XYZ% per year if you bring down your waste recycling, bring up your waste recycling ratio to certain elements. You also get kind of a tax credit. And why is that so important? Because the corporate world, of course, and especially the CFO and the CEO, they think in numbers, they think in cash flows. That means if you bring down your tax liabilities, and in the Western world, OECD countries, it's still a topic. So that is really, I would say, for those types of individuals, a really incentive where they say, okay, cool, now let's talk together with the other business unit called ESG department. Let's talk with the professor from the university, how we can increase our waste recycling ratio, for instance. That's attraction. Of course, it's initiated by government, and others can argue, oh, you're wasting taxpayers' money for something you could also enforce by just a strict law. Yeah. Of course, but again, here you have to think really from a more humanist point of view, Immanuel Kant and co, how to incentivize the directly affected parties, and taxonomy would become then a fully new meaning or an additive meaning in saying, okay, let's kind of incentivize the good behaviors with advantage tax regimes, or do the way around. But again, here, the carrot is always working better than other elements or things. That's an element. And of course, again, here, financial years, those guys, the industry is thinking more in quarters. So you can also, again, here have a positive effect. That's something I mentioned earlier. The reporting cycle is currently annual in the ESG space. So that means if a company is eager and keen to have a biannually reporting about its ESG progress, about its CO2 progress, because they get then also biannually tax incentives or whatever incentives, then the whole thing plays out. So that's then something which could make really a big change.
It strikes me that those near-term goals maybe are uniquely suitable to folks who want to come in from the cold. You know, they haven't met Martin Raab's criteria yet, for example. And it's like, it's going to be a one-off, right? We got to clean up the waste disposal unit, but after that, you know, we can get our you call them a school grade, right? It's like teacher will at least give us a B+, and we can, you know, get back out of detention or suspension. Yeah. I don't know what the metaphor is. You must actually, it strikes me that there's an important difference there between continual regular maintenance of a certain standard versus one-time initiatives that would sort of raise the standard on a permanent step change.
Yeah, right. That's also an element. I'm a proponent in regards to ESG measurements, ESG ratings or scores, however you want to call it. That you have, of course, kind of a mix of really period 1 to period 2. Is it an improvement? Is it going sideways, or is it becoming worse? So that's an element. But the other element is the ratio or the factor. That's a permanent, like you described, it's a permanent review of, okay, how full or empty is that trash bin? That means, for instance, the recycling, or how good or bad is the alignment between the executives' compensations to the EBIT of the company. So that's that yin and yang of having, of course, a measurement on, okay, how is the overall improvement in regards to point, plus a review of the constant ratios, so to speak.
Lots more to talk about there, but I want to make sure that we get to greenwashing.
Yeah,
I think greenwashing is at once maybe a very shallow and easy to understand topic, but it has layers and some depth to it. What's your sense of what's happening in greenwashing, what that really means, you know, from an expert's viewpoint?
Yeah, 2 aspects on greenwashing. Again, here very clear words. greenwashing on the one hand side is meanwhile, in my opinion, also kind of a generalized phrase used by, well, data users or green wannabes, let's call it that way, to make kind of an exclusion that those folks don't have to dive deep into the details. So that means, oh, okay, oh, it's greenwashing. I always said it, blah, blah, blah. That means kind of a generalized exclusion, not to look into the details. Everything is greenwashing, everything is bad. So that's, of course, really one aspect. If you deal with that on a daily basis, kind of an, well, imagination, perhaps an assumption anyway. On the other hand, as we mentioned earlier, of course, greenwashing is in some extent also, of course, well, or green used as positive PR is, of course, kind of a contemporary phenomenon in regards to that with green, with value-based initiatives, etc. Of course, you quickly win positive reputation, you quickly win the media, you quickly win stakeholders. So that's an alluring element for whomever wants not to go the extra mile, but just say, okay, let's do the website green, let's do a one-day green event something and spend 100 million check to the Ocean Clean Initiative, and that's it. In this element, the media and of course also the educated consumer in the year 2023 is smart enough, or have become smart enough to recognize and to increasingly distinguish from real initiatives with an impact, and distinguish here between just, you know, lip service and greenwashing. So that are aspects, elements in regards to greenwashing on a very general basis. So one is really people who just use it as, well, argument, exclusion, to say, yeah, that's what I ever thought. Right. You can't put that as real. It's just, you know, well, some idols and wrong things, don't care about. And the other thing is that, the allure that they say, okay, we need a corporate shift a bit, or what should we start as initiative this year from a corporate perspective, and they then mistakenly or wrongly create an artificial imagination of a company's green footprint or whatever. But again, here that will be quarter by quarter now. Well, uncovered, unmasked, and so essentially speaking, in regards to the corporate world, CFOs and the C-suite, they are well advised to really stick to meaningful things. Again, here, ask questions, deep dive into those things. And in the financial industry, greenwashing, again here, put some efforts in, do reviews, and again and that led or will lead then again to the topic of ESG data. Look into the details. What should that green fund really achieve? On which basis? What we are talking? Perhaps finally on greenwashing, it's definitely not greenwashing, but one element to think about. If somebody tells you, hey, we are considering 200 factors to make a judgment whether a company is green or not. So think about a donut chart, 200 factors, that means spot 5% is the impact per factor on the whole thing. Right. If now a company has a significant increase in 5, 8, or 10 of these elements, it's really not meaningful. It means nothing. And that is also something, if you want to judge, if you want to have a clear, meaningful, transparent, of course, understanding, then you should really switch to models, to mechanics who bring you forward, who don't confuse you or your end client. Yeah.
And Martin, is there greenwashing aligns to the E of ESG? Do you see the equivalent of like social washing and governance washing, or is it just not really so much an issue in those two columns?
No, absolutely. Very, very good point. Again, here, a more liberal point of view is it sustainable to have a t-shirt offered in a shop or in an online store for $8, for 10 euros, for $4.99? You know, that is also something, of course, it's a new thinking then. But again, here applying, for instance, in the social elements, applying relatively, I would say, decent to local levels, of course, to local levels, but, you know, coming up with meaningful social standards, that's something which did not yet happen. And again, in the EU, that supply chain initiatives, also in Germany, they brought up a supply chain law. In essence, really, you could save these 1,000 pages by just having an alliance between Inditex, H&M, and certain other Western, let's call them Western companies, who want to stand up and say, yes, our garment worker in Bangladesh, we pay those ladies not just $6 a day, but perhaps $12, $15, or yes, $18 a day. And yes, t-shirts for $4.99 are not longer available. We have to pay $15.99. Yeah, and that's, you know, then also again, and fully agree on the necessity or on the need. NGOs reporting that incredible skyscraper of unused or partly unused clothings surrounding our planet, and it's really exploding since 2000. We have conducted certain or co-authored certain studies. So that's also, of course, an element, you know, again here, yes, it hurts, but it would be more, I would say, transparent, more trustful if providers like a Zalando in Europe or large global retailers say, okay, we do by our own values driven, we initiate an alliance, minimum wage is that and that. Of course, it should be balanced, fully agree, everything should some be balanced. But that's the easiest way. You don't need 1,000 pages law or bashing from ultra left green guys who are, you know, with all these well, questionable actions. That's the very, very straightforward solution for that.
Yeah, something very interesting thing happened, I think, generationally in, say, North America, which is the context that I grew up in. You can see it between, say, my father's generation and mine. Which was that, you know, it was post-war and then things were kind of cooking. It was like, holy cow, China came online. You can get tools, hand tools, for like a fifth of the price, and like they work well. And then you realize, oh, actually the quality is pretty crap. And you think like, well, I could buy 5, you know, so what does it matter? And then in the next, it sort of skipped a generation. Then you got these characters called hipsters. And one of their great characteristics is that they'd be like, I'm willing to pay like $130 for a hand-sewn lumberjack shirt that was made by a guy in my own town. And so these two generations can't even understand one another. But it was sort of an extreme pull the other way to say, not only do I not want the cheap thing that's kind of extortionate rates have been engineered to create, but I want to do whatever I could possibly do to run the furthest way on the other end of the pendulum to represent this. And when you just mentioned you don't need sort of an extreme left-wing radical to tell you something, I think what I hear is actually there's it can be a very big tent, and you can have a real traditionalist conservative say, yeah, I'm signing up for this. I love conservation. I love this place that I live, and I've got no problem directing my, you know, retirement savings against people who rip holes in the ground. Or at the same time, you can have somebody else who says, you know, well, I'm from the other end of the political spectrum, but I can step in here too. Is that your sense too? Am I being Pollyanna-ish? Am I trying to paint some Walt Disney version of this, but it's not like that?
Yeah. No, absolutely. And especially, again, here, a very positive aspect for reshifting global trade. And that's not meant by extremes like we heard a couple of years ago. And one aspect is one of the main driver for the CO2 emissions we see and we see and witness every day is, of course, transport and logistics. So there are a lot of initiatives to bring also within transport and logistics carbon emissions down. But of course, if we just reshift a certain amount of global trade to more, like you mentioned, like more local or near local working places, creating.
So you account for that, do you? That's actually a factor you already look at.
Absolutely, absolutely. So that's very important. You support local businesses. You support, of course, the local, so to speak, business environment. And local could mean your direct community, could mean your country, could mean your continent. And of course, on the other hand, it's so to say, kind of the free cookie or the free icing on your cookie is then that you significantly get down the CO2 emissions. But again, that I'm a proponent of that. That will take time. That will take, like you correctly mentioned, that will take now new mindsets in the executives league, younger minds, perhaps more female minds. They say, hey, why should we, or as very simple example, why should we purchase all these calculator things somewhere in Shenzhen? Couldn't we buy it in Ohio and perhaps something in Texas, build it together here in the country, and then, having a less intense CO2 footprint, having less intense carbon, having a less intense environmental footprint, reshifting a bit, of course, the whole thinking of how industrialization works. But again, looking forward, like you mentioned, you're from Canada, which is, in my opinion, in the Americas, still the leader in regards to sustainability, despite issues we still have. I know it named tier sense, etc. But again, here, now is the time really to rethink about meaningful and working processes to make this planet still, I would say, worth to live as it was perhaps decades ago.
Yeah, you mentioned Alberta, and I think it's a fascinating case study for the kind of work that you do. I love your donut example, right? It's like, I'm sorry, this donut is not carved into 2 or 3 or 4 sections, it's 200. And so when you look at the tar sands, think like, okay, well, that's bad. You shouldn't rip huge holes in the earth and then leave the tailings. Okay, fine. But let's assume, let's assume for a moment that for the very near term, we've got to get some oil from somewhere. And, that's complex. So it's like, well, is it better to rip a hole in the earth and leave tailings right here? Only these guys have made huge leaps and bounds in the way in which they're trying to improve their record and cut down on emissions. Like they're making, these great, impressive gains. Or should we buy it from the Saudis? And then it's like, well, look, it's not in our backyard, and who knows? Like, well, that's kind of greenwashing of some kind, right? It's like you're saying we're green and clean because we buy it from someone else who rips holes in their earth instead of us. So that shows my bias on the issue. I'm very pro Alberta, naturally being from the soil there, but I'm really excited about, I think, your lens on this, which is somebody's got to do the homework, and not just one person, but hundreds and thousands of professionals around this planet have to do the homework. And what you said, like not the easy work, right, but probably the hard work, bit by bit, for something sophisticated to emerge. where it doesn't just paper over the problems or say, oh, look, paper cups, so we're all good here, and so forth.
Yeah.
Martin.
But anyway, it's manageable. That's perhaps my my final word on that. We all, as human mankind, we shouldn't be scared. It's manageable. It's not something we can't manage. We are enough people on that planet who are smart enough. We have the tools, we have the capability, we have now the awareness, what is relevant, what is not relevant. And yeah, here we go. So we just need to do it.
What a super anthem to end on. That was an hour that flew by. I think a number of people will probably want to understand GGX. Should they go, well, how would you prefer people track you down? Should they like read your book? Should they hit the website? Should they look you up on LinkedIn? What's your preference?
Again, here it's fully modular. So if there are specific questions, I'm really very open and happy to have a direct conversation. Glad to get a ping on LinkedIn.
Yep.
And if they're more interested on a professional usage, I'm more than happy to introduce the GGX ESG ratings. Again, here it's clear and transparent. We explain to data subscribers what they're really getting. So there's no black boxes or things we say, oh, that's intellectual property. We can't tell you because, again, we are working on a democratization. That means it won't cost you a fortune. It's affordable to get it broader, to get it in use, to get it kind of an industry modular standard to say, okay, we have rating from X, Y, and we have ratings from GGX.
Mm-hmm. When you are in Singapore, you'll probably have a dense meeting schedule, but if you have time, we'll organize.
Well, it takes some months.
I think probably a number of your existing relationships or friends are probably mutual, so that'd be nice. But please lean on Sage. If we can make introductions for you here or somehow make your landing here more comfortable or nice, it'd be good to see you.
Yeah, no, absolutely. Appreciate very much. And I will definitely upfront reach out to you. And then we can take it from there and see. Of course, also a great pleasure then to meet you in person, Kevin. Yeah.
Yeah, there's just for the record, because we usually like to say that's the book, everybody. So if you'd like to do that, then it's ESG rating, which Martin has written.
Available on Amazon.com, right?
Beautiful. Thank you, sir.
Okay.
Have a
Kevin. Have a great weekend. Thank you.
Take care. Bye.